All right, so you want to understand Meta, right? Their business and financials and what their future holds, but
Yeah.
who really has time to read through like 100 pages of financial reports? That's where we come in.
Yeah.
Today, we are diving deep, as you know, into Meta's 2023 Form 10K. It's the in-depth report that they file with the SEC. And it's got all the details about their business. We'll break it all down for you, give you the insights you need to know.
You know, the 10K, it's way more than just numbers, It's a story about Meta's strategy, their wins,
Yeah.
their challenges,
Yeah.
and what they think is coming next.
Yeah, it's like a behind-the-scenes peek into one of the biggest tech companies out there.
Mhm.
So just to start out, they're still publicly traded on the NASDAQ under the ticker symbol META. Used to be FDP, of course. Small detail, but it kind of shows how they're evolving.
It really does. That change from FB to Meta really shows their ambition to be bigger than just Facebook, moving towards a larger tech ecosystem. And as a large accelerated filer with the SEC, they're really under a microscope, subject to way more regulation and scrutiny, just because of their size and how much influence they have.
It's like playing in the financial major leagues.
Yeah.
Speaking of influence, their HQ is still at One Meta Way in Menlo Park, California. But their reach is global, as we'll see. But let's get down to like the nitty-gritty. How much money did Meta bring in last year?
So, in 2023, Meta pulled in a crazy amount of money, $134.90 billion in revenue. It's a 16% jump from 2022.
Wow, that is serious growth. But I'm guessing it takes a lot to keep a company like Meta running. What kind of expenses are we talking?
Their total expenses reached $88.15 billion. A huge chunk of that went to developing their family of apps. Think Facebook, Instagram, Messenger, and WhatsApp. But what's really interesting is that a bigger and bigger amount is going to Reality Labs, their Metaverse division.
Ah, yes, the Metaverse. That's Meta's big bet on the future. But is it paying off yet?
Not quite yet. It actually lost them over $16 billion in 2023, and projections show even bigger losses for 2024.
So they're putting a lot of faith in like a really long-term vision. Sounds like they're pretty comfortable taking risks.
They really are. They've even admitted that it might be a decade before their Metaverse investments actually start generating serious returns.
Wow.
But they do have a nice cushion to work with. $65.4 billion in cash reserves as of December 31st, 2023. Gives them flexibility to invest, acquire other companies, weather any Metaverse storms.
Like a nice safety net for their big swing.
Yeah.
Okay, let's talk about the family of apps for a minute. Facebook might be the most recognizable, but it's part of a much bigger ecosystem now. What's the overall reach of this whole family?
Well, as of December 2023, they had an average of 3.19 billion people using at least one of their apps each day. That's what they call family daily active people. And that represents a solid 8% growth year over year.
8% growth. That's pretty impressive considering how massive they already are. What about Facebook specifically? Is it still holding its own?
So, Facebook had 3.07 billion monthly active users at the end of December 2023. It's still huge, but the growth is definitely slowing down.
So where are they seeing the most growth for Facebook?
Main growth areas are India, Bangladesh, and Nigeria, places where internet access is expanding quickly. But here's something you might find interesting. Some people have multiple accounts, so Meta has to use some pretty clever ways to count actual people, rather than just accounts. They estimate their margin of error for these user numbers to be around 3%.
That's insightful. Shows that they're really thinking about how to measure their user base accurately,
Yeah.
which is super important for understanding their reach and impact. But at the end of the day, Meta is an advertising company, so how is that side of the business doing?
Well, there's good news and bad news. Ad impressions went up 28% in 2023, which is the good sign, but the price per ad went down 9%.
Okay, so they're showing more ads but making less money per ad. What's
Wow.
causing that?
It's a few things. Competition is heating up, with other platforms like Google, TikTok, Amazon, all competing for those ad dollars. And then there are the changes to privacy regulations, which are making it harder for Meta to target ads as effectively as they used to.
And I'm guessing the rise of Reels,
Yeah.
those short videos, is also playing a role.
Yeah, you got it. Reels are growing like crazy, but they don't generate as much ad revenue as some of their other products, at least not yet. Raises a big question. Can Meta keep innovating and stay ahead of the curve? Or will they end up becoming a victim of their own success?
It's the billion-dollar question, right?
Yeah.
But before we go too deep into existential crises,
Yeah.
let's circle back to the metaverse for a second. What are they actually spending all that money on?
Well, they're building an entirely new digital world. VR and AR devices, software for social platforms, even things like neural interfaces. Straight out of science fiction.
It a pretty bold vision, no doubt.
Yeah.
But Meta is mainly a software company, right? Can they really pull off building all this hardware?
It's a challenge for sure. Creating hardware is a whole different game than just writing code. They even admit in the 10K that they face risks, design risks, manufacturing, software bugs, component shortages, but they seem determined to make it happen.
It's a pretty high-stakes gamble. Speaking of risk, let's talk about those legal headaches Meta's been dealing with. The 10K filing mentions a bunch of class action lawsuits, especially around privacy and how they use data.
Yeah. Legal issues are pretty unavoidable when you're a tech giant these days. In 2023, they settled one class action for a whopping $725 million. And there are plenty more where that came from.
It's a constant battle. And it's not just angry users they have to worry about, is it?
You're right. The government is keeping a close eye on them, too. The FTC, state attorneys general, international regulators, they're all scrutinizing every single move Meta makes. The regulatory world is constantly changing, and it could have a huge impact on their future.
So Meta is trying to juggle a lot here, keeping that ad revenue coming in, pouring money into this metaverse gamble, and fighting off lawsuits and government scrutiny. So what does it all mean? What can we learn about what's next for them from all this?
That's what we're going to explore in the next part of our deep dive. We're going to look at the specific challenges and opportunities that Meta is facing and try to figure out what their game plan might be moving forward.
Stay with us, folks. We'll be right back with part 2.
You know, Meta is facing this kind of classic dilemma. How do you balance the success you already have with going after this future that's
taking shape?
Yeah.
Totally. And the 10K actually gives us some hints about how they're trying to do that. One thing that really stood out to me was how they calculate their active user numbers. It's way more complicated than you might think.
Oh, it's true. You're talking about billions of users. And they know that some people have multiple accounts, so they actually have to use these sophisticated methods to try and count the actual individuals, not just the accounts themselves.
So how do they do that?
It's a combo of different techniques. Analyzing like device info, IP addresses, even patterns and usernames to see if they can link multiple accounts back to the same person. It's like detective work on a massive scale.
It's kind of wild how much work goes into getting an accurate picture of their user base.
It's super important for them, though. These numbers are key to understanding their growth and their reach. And of course, their potential for making money from advertising. Even with all their fancy methods, they still estimate a margin of error around 3%. 3% might not sound like a lot, but when you're dealing with billions of users...
That 3% could represent millions of people.
Yeah, exactly. Really shows how hard it is to measure these massive online communities with perfect accuracy.
It really does make you appreciate the complexity of what Meta is dealing with.
Yeah.
Okay, let's change gears a little bit and talk about how Meta actually makes money. We all know advertising is their big cash cow, but I'm curious about the details. Where are those ad dollars coming from?
Well, the 10K actually breaks down their ad revenue by geography. Turns out not all users are created equal when it comes to making money.
I have a feeling this is where we see the difference between those Western markets that are super profitable and those emerging markets with tons of growth potential.
You hit the nail on the head. In 2023, the average revenue per user, or ARPU, in the US and Canada, was more than 11 times higher than in the Asia-Pacific region.
Whoa, that's a huge gap. So even though they're seeing strong user growth in places like India, North American and European users are still the ones driving most of their profits.
For now, yeah. But Meta is banking on the idea that those emerging markets will catch up as their economies grow and internet access becomes more widespread.
It's a long-term strategy, investing in growth today, hoping for bigger returns down the road.
Exactly. It's a classic tech company playbook, playing the long game.
Speaking of long-term plays, let's get back to the metaverse. We already know it's a massive investment that isn't profitable yet. But the 10K actually sheds some light on the challenges they're facing in trying to make this whole metaverse thing a reality.
One of the biggest obstacles is that they don't have much experience with consumer hardware. Remember, Meta is primarily a software company. They're used to building algorithms, not physical devices.
True. This is totally uncharted territory for them.
And hardware comes with a whole new set of challenges. Managing the supply chain, manufacturing at scale, quality control. These aren't things Meta has really focused on in the past.
And it's not like they're just building any hardware. We're talking about cutting-edge VR and AR headsets.
Right. It's a really complex undertaking. The 10K actually lists a bunch of risks they face. Design problems, manufacturing hiccups, software bugs, even shortages of components. They even acknowledge the possibility of inventory problems. Like, what if they build more headsets than people actually want to buy? They could be stuck with a ton of expensive hardware.
So they're walking a tightrope, trying to innovate, while also managing the logistics of production and figuring out what consumers really want.
And on top of all that, the metaverse itself is still a pretty vague concept. Even Meta admits it could take a decade for their vision to fully come together.
10 years is a lifetime of the tech world. Who knows what kind of crazy tech will emerge in the next decade? What if someone comes up with a better way to connect virtually? Something that doesn't even involve these clunky headsets.
It's definitely possible. And that raises a really important question for Meta. How do you convince investors and consumers to buy into a future that's so uncertain?
I guess they need to paint a really compelling picture. One that goes beyond just the tech specs, something that captures people's imaginations.
It's about selling the potential, the possibilities. But they also have to deliver on those promises, which is way easier said than done.
So it's a high-stakes balancing act, betting big on the metaverse, while also managing expectations and keeping up with the constantly changing world of technology.
And speaking of the changing landscape, let's talk about competition for a bit. Meta might be a giant, but they're not the only one playing in this game.
True. They've got rivals coming at them from all sides. And the 10K gives us some clues about who they see as their biggest competitors.
They don't actually name specific companies, but they do outline the key areas where they're facing the most competition.
Let's break it down. Where's the main battleground?
Not surprisingly, advertising is a major front. They talk about the intense competition for digital ad dollars, especially from companies like Google, Amazon, and even newer platforms like TikTok.
It's a crowded space, and everyone's fighting for a piece of the pie. Plus, those privacy changes we talked about are making it tougher for everyone in ad tech to target ads as effectively as they used to.
Absolutely. Meta can't just sit back and relax. They have to keep innovating and finding new ways to reach their target audience. The 10K mentions their investments in AI and machine learning to improve their ad targeting.
AI seems like the answer to everything these days. But the competition goes beyond just advertising, right?
You got it. The 10K also highlights social networking, messaging, and video sharing as key areas of competition.
So basically, everything Meta does.
Pretty much. They're going up against companies like Snapchat, Twitter, YouTube, even gaming platforms like Twitch. It's a constant fight for users' attention. And these days, that attention span is getting shorter and shorter.
Which means Meta has to keep coming up with new stuff, new features, new products, new ways to keep people engaged.
They got to stay ahead of the trends, keep people scrolling and clicking. Which brings us back to the metaverse. Who are they up against in this new virtual world?
It's like the Wild West out there, a whole new frontier.
Well, the 10K doesn't name any specific companies, but it acknowledges the growing competition from established tech giants, gaming companies, even startups. Everybody wants in on the action.
So Meta might have a head start with Oculus and their massive user base.
Yeah.
But they're going to have to fight tooth and nail to stay in the lead.
Oh, for sure. It's a clash of the titans. Way too early to tell who's going to come out on top.
It's definitely going to be interesting to watch. But before we get too caught up in the metaverse hype, I want to zoom out for a second and talk about a different aspect of Meta, their corporate culture.
Oh, that's an important piece of the puzzle. A company's culture can be just as important as its technology or its financial performance.
Totally. Culture can make or break a company. So what does the 10K tell us about the inner workings of Meta?
Well, it doesn't give us any juicy gossip, but it does offer some insights into their values, their priorities, how they see their place in the world.
So what kind of company culture are they trying to build?
The 10K really emphasizes their commitment to building community, connecting people, and fostering an inclusive and diverse workplace.
Sounds like they're trying to create a positive and supportive environment.
And they're not just talking the talk, they're backing it up with real initiatives. They highlight their efforts to reduce bias in hiring and promote pay equity across genders and races. They also talk about their internal programs to support employee well-being and provide opportunities for learning and development.
So they're actually putting programs in place to try and make a difference.
That's the message you're sending, of course. Like any big company, there are always challenges and critics. Meta has definitely had its share of scrutiny, especially around things like content moderation and data privacy.
Right. Those are tough issues. No easy solutions.
And the 10K acknowledges those challenges. They talk about how important it is to protect user privacy, to fight misinformation, and to make sure their platform is safe for everyone.
So they're aware of the criticisms.
Yeah.
And they're trying to do something about it.
That's what they want you to know. But ultimately, it's up to each individual to decide whether they believe Meta is living up to their values.
It's a matter of trust. And building trust takes time and consistent effort.
Absolutely. And it's something that's constantly being tested in the digital world we live in.
We've covered a lot of ground on this deep dive. Meta's financials, their metaverse plans, the competitive landscape, even their company culture.
We've looked at this company from all angles.
But there's one more piece of the puzzle we need to examine: the legal and regulatory landscape.
Because, let's face it, Meta has had more than its fair share of legal battles.
True. They've been in the headlines for everything: privacy lawsuits, antitrust investigations. And the 10K actually gives us a peek into the risks and challenges they're up against. One thing that jumped out at me was just the sheer number of legal issues they're dealing with.
It's a lot. The 10K lists a whole bunch of class action lawsuits, government investigations, regulatory inquiries from all over the world. It's a reminder that when you're this big, you're under a lot of scrutiny.
Okay, let's break it down. What are the biggest legal threats on their radar?
One of the most prominent is data privacy.
It seems like every tech company is under fire these days for how they collect and use and share our data.
And Meta, with all the personal information they have, they're a prime target. The 10K mentions several class action lawsuits, all related to privacy violations.
Yeah, these lawsuits can be super expensive. Not just the financial settlements, but the damage to their reputation.
And it's not just lawsuits they got to worry about. Governments are cracking down on data privacy, too.
Right. The 10K talks about this constantly evolving regulatory landscape. New laws and regulations popping up all the time, both in the U.S. and internationally.
It's a minefield, constantly shifting. And Meta has to be on their toes to adapt and stay compliant.
What about antitrust issues? I know they've been accused of being a monopoly and trying to stifle competition.
That's another major battleground. The 10K acknowledges the ongoing antitrust investigations by the FTC and various state attorneys general. These investigations could have serious consequences.
Like what kind of consequences?
We could see hefty fines. They could be forced to change how they do business. They could even be broken up.
Wow. That would be a huge shakeup in the tech world.
It would. But for now, it's all just speculation. We'll have to wait and see how it all plays out.
So data privacy and antitrust are two major legal fronts. Any other potential legal landmines we should be aware of?
The 10K also mentions things like intellectual property disputes, securities litigation, even employment-related lawsuits. It seems like they're fighting legal battles on all sides.
I guess it comes with the territory when you're a tech giant.
It awesome does. But it's important to remember these are just potential risks. It doesn't mean they're actually guilty of anything.
But it does highlight the amount of pressure they're under.
And that pressure can definitely impact their bottom line and their ability to operate freely.
Okay. We've gone through their financials, the competitive landscape, their company culture, and the legal challenges they're facing. I think we've done a pretty thorough job of dissecting the world of Meta.
We haven't missed a thing.
But before we wrap up part 2, I have a question that's been bugging me this whole time. With all these challenges and risks and all this uncertainty, is Meta even a good investment?
The million-dollar question. And if I had a crystal ball, I'd tell you.
I didn't expect any easy answers.
Yeah.
But what do you think?
Well, as we've seen, Meta still has a lot going for it. They're still dominant in social media. They have a huge global audience. And they're making tons of money.
But they've also got some pretty serious headwinds.
Oh, yeah. Competition is fierce. The regulatory landscape is getting tougher. And that metaverse investment is a big gamble.
So it's a mixed bag.
Exactly. High risk, high reward.
What should our listener take away from all this?
I think the key takeaway is that Meta is at a crossroads. They're trying to balance what's working now with their vision for the future. The decisions they make in the next few years are going to determine their fate.
It's a make-or-break moment for them. And it shows that even the biggest tech companies in the world aren't immune to change and disruption.
It's a fascinating time to be watching all this unfold.
Couldn't agree more. And on that note, we're going to wrap up part 2 of our deep dive. Join us for part 3, where we'll explore what the future might hold for this tech titan. So we've spent the last 2 parts of this deep dive really digging into Meta's 2023, like their financials and those big bets they're making on the future, and the competitive landscape, even their company culture and the legal battles they're facing.
Yeah, we've taken a close look at the company from a lot of different angles, using their 10K filing as our roadmap.
And now for the big question. What's next for Meta? What does the future hold for this company that's trying to keep their current success going while chasing this pretty ambitious vision for what's next?
It's the question everyone's asking, from Wall Street analysts to everyday investors. And even though I don't have a crystal ball, we can use the information we've got and explore some possibilities.
Okay, so let's play Future of Meta. I'll throw out some possibilities, and you as the expert can tell me how likely they are based on everything we've seen in that 10K.
Sounds like a plan. What's your first prediction?
All right, scenario number 1. Meta goes all in on the metaverse. They double down on reality labs, pump even more money into it, and become the leader in virtual and augmented reality.
It's definitely possible. I mean, we saw in the 10K that they're already investing heavily in the metaverse, and they've said publicly they see it as a huge part of the future, like for how people interact and even work.
They've got a head start in some ways, right? Like they own Oculus, which is a big name in VR headsets, and they have this giant global user base they can tap into.
Those are big advantages, no doubt. But we got to remember the competition is fierce too. We talked earlier about how Microsoft, Apple, Google, they're all making moves in the metaverse. And those companies, they have deep pockets and a ton of experience with building hardware and software.
So even if Meta goes all in, it's not going to be a guaranteed win for them.
Not at all. It'd be a long and expensive fight. They'd have to constantly be innovating, attracting developers and creators to build experiences for their platform. And they got to solve those technical challenges of making virtual worlds that are truly immersive and engaging.
Okay, so scenario number 2. Meta shifts their focus back to their core business, social media and advertising. They double down on Facebook and Instagram, find new ways to make those platforms even more profitable. And maybe they ease up on the metaverse spending for a bit.
Yeah, that's another possibility. I mean, their family of apps is still bringing in the most money by far, and they've proven time and time again that they can adapt those platforms to stay relevant.
Like they were able to bring in features like stories and reels, and they're always tweaking their algorithms and ad formats to keep users engaged and advertisers happy.
That's right. But this strategy comes with its own risks. The social media landscape is super competitive, with new players popping up all the time, like TikTok.
And we can't forget about those privacy regulations that are making it harder for every social media company to target ads the way they used to.
Exactly. So even though Meta could try to squeeze more profits out of their current platforms, it wouldn't be a walk in the park.
All right, last but not least, scenario number 3, the one nobody wants to talk about. Meta gets slammed with a massive regulatory crackdown. Antitrust lawsuits, huge privacy fines, restrictions on how they collect data. Everything hits them at once, forcing them to break up the company or drastically scale back their operations.
That's the worst case scenario, but it's one they can't ignore. The 10K filing goes into detail about the legal challenges they're facing and the potential impact of future regulations.
Like we talked about earlier, those antitrust investigations and privacy lawsuits, those are real threats, even if they're not the most likely outcome.
True, and it just goes to show that even the biggest tech giants aren't immune to government regulation and what the public thinks.
So we've got 3 potential futures for Meta. They dominate the metaverse, they go back to their social media roots, or they get hit with a regulatory tsunami.
And in the end, it's probably going to be a mix of all 3.
Yeah, it's rarely a simple black and white situation in the tech world. But after spending time with this 10K, I got to say the future of Meta is anything but predictable.
It's a company that's constantly pushing the boundaries, innovating, adapting to new challenges. Love them or hate them, you got to admit they're a major player in the tech world.
So what should our listeners, who are now basically Meta experts, take away from all of this?
Pay attention. Watch what Meta does in the coming months and years. The decisions they make, the investments they prioritize, how they handle challenges, all those things will give you hints about where they're going and what role they'll have in shaping the future of technology.
It's a story that's still unfolding and one that affects all of us who use technology in our daily lives.
So the next time you see that Meta logo, remember what we learned in this deep dive. There's a lot more happening behind the scenes than you might think.
This has been The Deep Dive. Thanks for listening.